Hello guys, welcome to yet another exciting video on our YouTube channel. My name is Anthony Kembati. My guest today is Mike GITONGA, a bonds trader at AIB-AXYS Africa. If you've noticed, in the last 3 videos, we've really talked a lot about stocks. So today we decided to spice up things a little bit and talk about bonds. To make it more interesting, we're going to have a live trading segment where Mike is going to show us how he trades, and we're going to see how one can trade bonds in real time. I know you guys are already excited, so let's get started. Mike, so I would like to start by asking you, what are bonds and what's the difference between treasury bonds and treasury bills?
So bonds are bonds and bills. Basically, they have one key role. The government is trying to make take a loan from its citizens on an investor aspect. Now, for the treasury bills, they are short term. That is one of the major differences that we have between bonds and bills, because bonds are long term. Bonds are, it's not statutory, but the shortest time you should hold, advice from a professional, is that you can hold it for at least 1 year so that you get a full coupon payment. However, for the bills, we have a 3-year bill, 3-month bill, sorry, not 3 year, 3 year months. We have 9 months and an issue for a whole year, 1 year bill. So it depends with what you're going after in terms of your intentions with your money, or your plans you have with your money. Now, for the bills as well, they all have a 15% withholding tax attached to them. This withholding tax is charged on coupon payment. All right. As for the bonds, bonds are long term. We have bonds that are 25 years, that mature in 30 years, that mature in 20 years. So as well, you have to choose. Basically, bonds are just long term. And like I said initially, the shortest while you should hold a bond is just 1 year, so that you can at least get your full coupon payment. Also, bonds, we have 2 types of bonds. We have FXD, fixed, and what we call IFB, that is an infrastructure bond. For FXD, there are 2 categories in terms of they are subject to the withholding tax. For bonds, FXD bonds that are less than 10 years, they are subject to a 15% withholding tax. For the bonds that are above 10 years, they are subject to 10% withholding tax. You get the difference? Yeah. So below 10 years, 15%. Above 10 years, 10%. Yes. So that is a major difference we have between bills, treasury bills and treasury bonds. There are all these nitty-gritties here and there that I think it is important that our viewers get to know when it comes to the aspect of income tax, the whole withholding tax, and some that don't have withholding tax. Now, on the third point, now for the IFB, which is also a type of a bond, the IFB is zero taxed because they're used for infrastructure. I don't know the makers of that law, what they were pre-thinking. However, this is what we have in terms of the statutory provisions with regards to infrastructure bonds. Yes.
Okay. Why should one invest in bonds, and what makes them better compared to other asset classes, and how do you earn from your investment?
Well, that is a very good question. Now, you see, I would like to demystify a couple of things, maybe say most of investors, or anybody who's looking to invest out there, is usually lied to. First of all, bonds are not that complicated, and they are accessible to everyone who is able who is looking to invest, or has some reserve funds to invest. Now, the minimum amount, like I mentioned, there were 2 different categories of bonds, right? There's the FXD and there's the IFB, if you remember that. I hope you do. So, for the FXD, the minimum amount is 50,000. 50,000 Kenya shillings, not dollars. So at least if somebody is looking to invest at 50K, if you have some reserve 50K, you can rusha that thing kidogo, the ikwena, napata kitu. You understand? As for the IFB, the minimum amount is 100,000 Kenya shillings. Minimum amount you can invest for the IFB, which is the infrastructure bond, as I had mentioned earlier. The reason why I would advise, or I would really like encourage investors to come to the bonds market. Number one, it is the most rigid market that we have in terms of safety, in terms of coupon payments, in terms of also how regular do you get your money, and how safe is your investment. You understand? So what I mean is, compare that to, say, the equities market, which is the shares market and whatnot. Their prices keep fluctuating. So today, you bought Safaricom at Safaricom shares, any other shares, say, let's say X shares at, say, 2 shillings. Tomorrow, they are 30 shillings. Yes, you sell some, you shikilia some, or you hold on to some. The next day, the same Safaricom, which was X number of equities, were selling at 30, which you had bought at 2 shillings, fall to as low as 1 bob. Can you imagine the frustration? You understand? And maybe stay at that price for quite some time. You understand how the fluctuation of prices are coming in? Yeah. You see, the difference between now that and bonds is that with bonds, today, CBK has announced a new bond, IFB-1/2020. That's how we name them, or that's how they're named. Let's say it's an infrastructure bond 1/2022/ how many years? How long it's going to be held. Yeah. You understand? Or how long they expect it to hold.
So the last digits represent
the period. It's supposed to be the number of years it's supposed to be held. The middle figure is which year it was issued, and the first one is identifying it either as an infrastructure bond or an FXD. All right. So if they have issued IFB 1/2022/ say 20 years. All right, and they say, and after the primary, I'll get to the primary and the secondary market. There's the primary and the secondary, and the primary results have come out, and they've issued what we call a market determined rate. Okay, and they say your bond is going to pay a coupon at the rate of, say, 12%. That 12% for that period of 20 years will not change. So you can tabulate your money. You can tabulate from now till, if I invest my 100,000, I'll be making 12% of the 100,000, whatever that amount that you've invested, all right? If it's 100,000, we'll say 100,000, multiply that by 12%, divide by 100, because it's 12%. So you get how much you'll be making annually, at least. Okay. So for the next 20 years, or say maybe you're holding it for 3 years, you can give an estimate of how much you're going to make.
Okay, that's nice.
As opposed to, say, today you invested you 100,000, tomorrow your 100,000 is not worth anything.
Oh, okay.
Yeah. Also, it's important to point out that because based on the fact that it is issued by CBK, statutorily you are protected by law to add your coupons. Coupons are paid at least twice a year. That is biannually, right? Yeah. So every 6 months you get something, half of what you're supposed to get in a year.
Okay, yeah. So that's, let's say, 6%.
Yeah.
If it's 12,
yeah.
6%.
Yeah, ukifanya hesabu tu 6% not bad. Yeah. Yeah.
So you said there's no risk of defaulting.
No risk of defaulting at all, unless this country goes to war and the constitution is suspended, and we do not have a state and a government that is a legitimate government that is running. Okay. Yes. So that is why I would actually encourage investors, to come to bonds, because bonds are safe. Bonds, there is no complication really that will make it so difficult for you to understand your investment choice. Yes. So there's, I think, Kembati, another reason, and this is where now we as bonds traders have it easy with our investors or our clients, is that, number one, the rate that we pay back, that is the coupon rate, which is like now / dividends when it comes to shares and whatnot, are the highest anywhere. Whether you talk about money market, whether you talk about equities, whether you talk about all these other forms of investments, it is only bonds that like currently, what we have as an IFB is trading at paying coupons of 13.72. You will not get that anywhere that easily for a year, and that is annually. You're getting your 13.72, sure, for sure. No doubts of SG defaulting or SG struggles with calling your broker. Hey, I've not seen my money. You did directly with CBK. I'm only, as a trader, I'm only a platform that is giving you, connecting the client to CBK. Yeah.
So that actually differs from circles, which offer closely to, let's say, the same amount, but you can't withdraw your money, right?
In terms of withdrawing your money, that's a very good question. In terms of withdrawing your money, you can invest today. Say you invest your 200,000, and you can call me tomorrow and tell me you have a sick child and you need to liquidate. I'll sell your bond. You tell me I need to liquidate like 50K. I'll sell the 50K and liquidate it, and you'll have your money in your account. That's all I need. You just need to make a call.
Oh, so you would get it immediately?
Not immediately. You give it a window of like say 2 to 3 weeks, because there's some paperwork there that needs to go to CBK for it to be availed in the market. Then I need to find a suitable buyer. Then we switch.
Actually, I saw that on the liquidity spectrum, bonds are actually the most liquid asset class next after cash.
Yes.
Okay, that's interesting. Let's talk about the procedure for investing. How do I know which bonds are on offer at any time? And then how do I make the payments, and where do I go to make the payments? And finally, what happens after the bond matures?
So, that's a very good question, because now you're capturing now the procedure of identifying a bond and how to make the deposits. So, there are two types of markets. There's the primary market, and there's what we call the secondary market. The primary market is issued every month by CBK. Every month there's a primary issue that has been announced. When I say a primary issue, there's a tap sale, there's a resale, and there's a fresh. When I talk about a tap sale and a resale, those are already bonds that have already been issued prior, but because of maybe say the CBK, the government is looking for more funding on that specific one, all right? So they reissue it again as a tap sale or as a tap sale or as a resale, okay? Then there's a fresh bond still in the primary, all right? And the fresh bond always comes out without even the coupon being issued. So the coupon is market determined. For the tap sale and the resale, the coupon is already known, determined. All right. So whenever we are addressing the issues to do with the availability of a bond and where one can get them. So in the primary market, where one can get them is on the CBK website. They usually, whenever they issue a new bond, they post something called a prospectus. This prospectus has all the information with regards to that particular bond, from the period to whether it's an FXD or an IFB, the commission that we will make as traders, all that posted on the prospectus. Also, if it has a coupon already, that will be indicated. That is for the tap sale and the resale. Okay, it will be indicated in the prospectus. So for the primary market, like I've said, the information is on the CBK website. At any time, at any point, you can gather from the CBK website. Every month, they usually issue a new bond. As for the secondary, this is where I come in to assist the client fully. So you come to me, you tell me maybe you're looking for a particular bond, or you're looking for a bond that has this particular coupon. That sometimes we have clients who tell you, I'm looking for a bond that will mature in the next 2 years. You get that? Yeah. They come to you, they tell you, I'm looking for a bond that is going to mature in the next 2 years. So you have to go to the market and look for an old bond that was issued, say, come if you're in 2022, you're looking for a bond that will mature in 2024. So you have to pick out maybe 2 or 3 on the FXD segment and in the IFB segment. Sometimes they are very specific. I'm not looking for an FXD. I'm looking for an IFB that will mature in the next 2 years, which sometimes can be very pricey because people are about to get there. When maturity is about to arrive, most clients, that tells you a client has held on to their bond for a long time. If it was 20 years, 25 years, that client has held on to that bond for quite some time, yeah? So sometimes they're not looking to sell. Majority of them are not looking to sell. So you have to go through what we call banks, some banks, circles that have these clients within their portfolio that sell part of their bonds. And sometimes you have to go through also insurance companies that also have clientele that have those accounts for investments. All right? Yeah. So usually we have that in the secondary market. You can only come to us as dealers because we have the information. Then we can tell you this one is available. Yeah. So for the secondary market, like I've said, you have to look for a broker like myself. Then we can advise on what you need. If there's anything better than what you're looking for, I can advise you. This is way better because of 1, 2, 3, 4, 5, maybe the coupon. Maybe you're getting it at a cheaper price and all that. Yeah. Okay. So for the primary, as I've said again, kindly do not mix it up. You can keep checking it up on the CBK website. Okay. Yes.
Okay, let's come up with a simplified workflow. I have 100,000 in my account right now, and I want to invest in the infrastructure bond you've just talked about. So would you mind explaining to me the whole process from the beginning to the end up to the maturity date?
I didn't talk about the infrastructure, however, it's if IFB1 2022 18 year. Okay. All right? So you're an interested investor and you're looking to invest in we call it IFB 25. In the market, that's the name that we've given it. The first step, the first question I'll ask you as a new investor is that, do you have a CDS account? Yes. Do you? Okay, very good. Then that makes my work easier. So if you have a CDS account, a bonds CDS account with CBK, the first step, if it's in the primary market, then we will bid. I'll have you fill in an application form indicating all that, inclusive of your CDS and your virtual number and a signature pale chini. Then I'll stamp it with our stamp, our company stamp, which now I'll forward it to CBK. Once the results are out, I'll share. Then the next step is making payment. This payment, you'll make it based on the application number that you'll get from CBK. The application number is what specifically identifies your bid. All right? Specifically identifies your bid. So when you're making your payment through RTGS, which is you instruct your bank, kindly make this payment to CBK based on these results from CBK. All right? Once that payment is made, then the investment is good.
Okay. And how do I start receiving my coupons?
Coupons is 6 months from the date that the results are out, once you make the payment. Okay. Yeah, because you make the results are usually out on a Friday, and you have between Friday and the next week's Monday to make the payment.
Okay, and what will happen after the maturity? Will I get my money back?
Yes, yes, you get your principal amount back after having all your coupons for the period that you'll hold it for.
Okay.
Yes.
Can I take some money before that?
Yes, you can.
Is there
yes, you can. In
that?
fact, no, there's no penalty for that because that's why we are a liquid market. Okay. That's why the market is actually identified as a very liquid market, because at any point you can liquidate your money. At any point. Okay. Yes. However, we usually advise clients, like I had indicated, we usually advise clients to at least hold their bonds for 1 year, at least to acquire the first full coupon payment.
Okay. So how do I know which bonds are on offer at any time?
That's actually a very pivotal question, because you see, information is power and knowledge is power. There are two aspects of our market. That is the primary and the secondary market. Number one, for the primary market, they're issued every month by CBK. So you can always visit the CBK website and keep up with what they are issuing. Okay, if you actually log in here on the CBK website, there's where they say latest bonds issued, bond results. Okay, latest Treasury bills issued. You click on that, it will give you all that information as well. It's also important that I tell you, our company AIB-AXYS also has a website that releases weekly, monthly, and daily reports with regards to what is in the market, what is active, what is not active, and the prices they are trading on. It's a very informative site because it talks about both the equities market and the bonds market, depending on what you're looking for as an investor or a potential investor. So when it comes to the secondary market, we do have those sites as well. NSE has it, and when I say NSE, I'm talking about the Nairobi Securities website. AIB also, we do issue the reports on a weekly basis, on a daily basis, and also you can call me up. Yeah, you can call me as an agent of AIB, and we can go down. We can get down to the nitty-gritties of what is available and at what rate. What issues do I have at the as we speak? What am I selling? You understand? Or what am I buying? So I can give you an overview of what is available in the market. I can give you a feel of what is good, what is better. Yeah, on that level of information. Yeah, because you see, it depends with what the investor is looking. Sometimes you get an investor who's maybe say a foreigner, and they're looking to invest, and they don't have a feel of the market. So you have to be very, comprehensible when it comes to this is what we have. There are these types, and this is what is available at the moment. This is what maybe you can work with, can suit your particular interests at the moment. Yes.
What are some of the factors you need to consider when deciding which bond you want to invest in?
Those are some of the questions and the conversation beginners. Whenever a potential client has come to you and they're looking for an investment, a suitable investment to put their money in. So, first of all, you need to understand how much money you're looking to invest. How much money is, because we do have a limit, all right, in terms of how little can you invest. In terms of how big can you invest, can go as big as $1 billion, 10 billion. You're not bound by the maximum, but the minimum is bound at, like I said, the FXD at 50,000. And for the IFB at 100,000. Yeah. So with that information, that is the first one. Secondly, you need to, first of all, have a CDS bonds account. I cannot stress that enough, because without that, you actually do not qualify for, you're not even identified as an investor, basically. Okay? So with those two, probably the other thing I would advise an investor to have is a good broker. A broker that keeps you informed, a broker that keeps you updated, a broker that, discusses with you the difference between this particular bond and this other bond, and the yield to maturity on how, a broker that, has this full disclosure whenever it comes to issues to do with your investment portfolio in bonds. Like, for example, us at AIB, we are known for our service delivery in terms of information to keep the investor aware of what is in the market, what is running in the market, and how big the market is looking to interact with them as an investor. Also, we have a very able team of brokers, both in the equities markets. If you're looking for bonds, I'm one of them, working with AIB. And we actually, I'm going to give you top-notch services when it comes to bonds and anything to do with your business as an investor. We are all-rounded, yes.
You have talked about trading bonds in the secondary market. Do you mind describing what your day-to-day activities are?
Actually, our day-to-day business is the secondary market. That is what we wake up and go to work. That is your tasks for the day. My task for the day is usually going to the secondary market, calling other traders from other companies and identifying what do you have, as also I'm selling what I have. Like, for example, scenarios where a client has come in and they're telling me, oh, I need to liquidate, or a company has come in and it has invested, say, 20 million and it's looking to liquidate 10 million. They come in, they fill in what we call green forms. These green forms are sent to CBK. CBK then avails that particular bond in the secondary market. So if you go to the secondary market, usually we have a system called Avvento. Avvento is a system that has been developed, I think around 2011, if I'm not wrong. That is what we go to study in the ATS, the automated trading system. That is what we study, and then you're issued with an Avvento, which is a platform that we use to trade the secondary market. So if I may take you back in the day when we didn't have the automated system, we had something called a floor. This floor had all these numbers, digital numbers running up and down. Some of those numbers were for bonds. This particular bond is being issued at these rates. The rate is what I told you, yields to maturity, the price, what you use to price the bond. So that particular price, which is indicated, now myself and another broker will actually now debate on, now bargain. It's called a bargain. You bargain. No, nipatie at this, I'll give you at this. I'm selling at this. No, then we have a common ground. Yeah. We have the bargain. Then once we agree, we inform our clients. He informs maybe his buyer or his seller. I inform my buyer or my seller. Then if they're agreeable, they confirm via email and we proceed. We proceed with the trade. So that is the main business of a trader or an agent. That is where we make our commissions on a daily. That is by purchasing and selling of bonds in the secondary market. So to answer your question, the secondary market basically is our day-to-day business. The primary market comes once, like I said. It comes once the bid is off, AMA is done, poof, it goes away. But for the secondary market is what we deal in on a daily basis. Yeah.
So at the beginning of the video, I had told you guys we were going to have a live trading segment, and this is mainly for our viewers who would like to become day traders. So let's do that, and we're going to get a chance to watch Mike trading live.
So the trade we have is not active really. I'm just trying to show you what are the ABCs of trading on the platform, which is called Avvento. So guys, welcome to the Avvento. This is what we call the Avvento, and as you can see, it has various sections, where there's the trading section, the transactions that you've conducted for the day generally. They're there. They're there. Yeah, that is the list of the trades that have been done today. Today was not such a busy day since we're in the election week. As you can see, there are two. And they indicate the counterparty, the trader, and if you're selling or buying. So that is it on the majorly. That is the most important aspect of that section. It also indicates the orders that have been put on today. So we're going to put one order today for buy and sell for both. It's called a cross trade. You as one just one trader on the system, you can buy and sell one bond without another counterparty. However, you just have to have the details of the sell side, which is the order number, the accounts, and the order number and the account. That's a major aspect. And as for the buy, you just need to have the account and also how much you're buying and the rate at which you're buying it at. And also, even if you and as well, if you're a seller, you need to also indicate that the amount as well of how much you're buying and at what rate. So we have the orders here that were placed today. The orders already have been traded now that we are in the market at 3:40. So it's past trading hours. These are the trades that have been done today. As for the positions, these are what you have and what are you selling. These are the consolidated ones. The report only is an aspect of the system that is used when there's heavy activity, there is high trading activity on a particular bond. So at times, just to be safe, you do a trade on the report only, so that you don't end up having let's say there's a buyer on one side and a seller on one side, and that particular bond has a lot of activities. As in, when I mean activities, I mean the buy and sell aspect. Yeah, that particular bond is trading so much today on that particular day. So sometimes we go to the report only, so that we make sure we are not hit by a counterparty that is not ours, or you're not dealing with in that particular moment. So yes, this is the unsettled trades. These are not yet paid for. They have to be sorted out. Settled trades, these are section that just shows the ones that have been settled, already paid for. Unconfirmed trades, sometimes we do have trades that happen to have mistakes. Maybe say you keyed in the wrong amount, or you keyed in the wrong rate at which you're supposed to sell it. Then confirmed trades, that's where you go. Also, the instances where in the event of trading, the counterparty does not have adequate, the seller does not have adequate on the order number, it does not have adequate funds, and that is subject to confirmation by CBK. So on the unconfirmed trades, if you end up trading a bond that has on the sell side that does not have sufficient funds, then you end up it ends up on this list of the unconfirmed trades. Okay, so that is it for sorry guys. Yeah, we're good. So that was a part of the transactions. So the holdings, this is a list where that shows the bonds in the market. Hello? Yeah. Oh. So I'll try first of all, send the first one, then you tell me if it's good. Kama iko poa, then I'll do sound via the phone, yeah? Alright. So guys, sorry about that. Let's proceed. So yeah, on the holdings section, we do have a list of what is available in the market, and they're listed there. So we go to market trades. This just shows generally in the market what has traded in the market. Generally, not only for AIB, but in the market as per the listing in NSE. The NSE just lists the trades that have taken place today or in that particular day. So we have the news feeds category, the news feeds section, and this one just gives updates on issues to do with trading and what is available. So back to our core business, trading. So let's say, for example, on the trading aspect, we have the FXDs and the IFB section. You can see that this is the IFB section. Yes, and we have the corporate bond section. In case you're trading corporate bonds, this is where you come to. In case you're trading IFBs and IFB, this is where you come to. So you can either pick an IFB or an FXD, because those are the most commonly traded bonds. Let's pick this one, the first one. So as you can see, we have the quantity slot, the yield slot, and the price slot. Now here, this is where you key in the account, that the particular account that the buyer is for the buyer, the buyer's account, the CDS account that belongs to the buyer, or rather the buyer's CDS account. This is where you key in the details of the CDS account. This is where you key in the amount. This is where you key in the yield to maturity that you're trading at, which is the rate as well. And this, once you key this in, you'll notice there's a change on the price, because the yield is what the price of the bond is. Let's say, for example, like now it's at 9.95, and you can see the price is at 106.5795. so if we change that to 10.952, you will notice it changes to the price changes to 106.0346. Yes. All right. So usually this affects it because already the bond is indicated, and that is very clear. So let's take, say, this particular trade, the volume was 1 million, and the particular account is let's search for an account here, independent account. Okay, right. So this is a particular client who has that who has an account with us. You can see B12, and the name of the client. So we place an order for buy, and you can see the consideration is indicated on your screens in the far right. That is the amount that they're supposed to pay. So for this one, at a rate of 10.92, the consideration will be 1,060,346. So we place an order for buy. Okay. If you go to the transactions and we check on order, I think because the market is closed, we can see that. It's supposed to appear here on the order section. However, let's give it time. Let's go back to the trade again. Then we place another one for the sell side. You'll indicate the same information. Then 10 points. What do you agree on? 10.92. All right. Yeah. 10.92. And say maybe this is the client's name. If the individual investor. So we indicate the same thing, the same information. You'll see the consideration is the same. The only different thing is that you're on the sell side of that particular bond, and the client who's selling the amount is different. So you also click on the sell. Yeah, insufficient balance. So as you can see, there's insufficient balance transactions. I would like to cancel that trade because hope it didn't indicate. You can see the orders, it's not the unsettled trades. Let's check. Let's be very vigilant to make sure, yes, unconfirmed trades, to make sure that we don't have that lining up and waiting for settlement or to be confirmed as a trade. Okay, so it hasn't been confirmed because the market is closed. Yes, so we are safe. So that order didn't go through. However, that is the ABC of trading, and yeah, so that is the Avvento, and that is how the Avvento works.
So guys, I just want to say thank you for sailing with us through this episode. I hope it has been informative. I hope you've enjoyed, and I hope you've been able to extract any information that would assist you in your journey as an investor. You can catch us on at AIB. We are located at General Madenge Road in Westlands, the Promenade Building, 5th floor. Kindly pay us a visit. Also, check out our website. We have our social media handles on Twitter at AIB-AXYS. The axis is AXYS, okay? Not axis, but axis. That is AXYS, right? Hope to catch you as a client very soon, and invest in your future. It's important. Thank you.